What's going on, guys? In this video, I'm going to walk you through how to create your ultimate dividend stock screener. And now I say your ultimate, not the ultimate, and that's because depending on your age, the amount of money you have that you're investing, your risk tolerance, your goals, all of these different things can determine what you are looking for, okay? So what you're looking for might be different from what I'm looking for, might be different from what someone else is looking for. And what I mean by that is because I'm younger, I'm gonna look for something different than if you are 50 or 60 years old and you're watching this, or if you are someone that has a lot more money than me, or if you're someone that has a lot less money than me. So it just really depends on where you are financially and where you are with your age and what your risk tolerance is. So that's why I say your ultimate screener, and what we're gonna use is Finviz. You've probably seen me use this in a couple of other episodes if you have watched them. If not, make sure to check them out, and while you're doing it, subscribe and smash that like button, not only in this video, but any other video you look at. Really helps my algorithm, and I really appreciate that. Okay, let's get back to the video, but do it, please. So if we jump over to Finviz, what we're gonna do is we're gonna click on the screener. And this is where we're gonna be playing the entire day. We're gonna be in this screener, narrowing this list down. We got 7,615 stocks to look through. And what's great about this is we could screen this down to as small of a result as possible, and we could find these gems that we didn't even know about, or maybe we did know about, but we didn't realize how strong their financials were, and there'd be a company we would potentially want to invest in. So what are we looking for? And I know it's gonna be different from everyone, but I'm gonna show you at least what I would look for, and maybe it'll give you some inspiration and some ideas of what you could do to find your perfect list. So what we're gonna do is, I really don't like to touch anything that's smaller than a mid cap. I mean, realistically, I probably invest in anything bigger than a large cap, but what we're gonna do right here, mid, so over 2 billion. Because I have invested in some companies that were under that 10 billion, so they were a mid cap like Etsy, but now it's technically a large cap because I think it's 13 billion as I'm recording this. But anyways, so you can see right here, we knocked the list down to only 1,700 stocks. We had over 7,000, now we're under 2,000. So already this screener is helping us out tremendously. But we want to keep narrowing it down because still looking through 1,700 stocks, that's a lot of work to do, and we don't want to do that. Investors are lazy. They like to take the simple way out. So after we got our market cap done, we're looking for dividend stocks. So we're going to find a dividend yield of maybe over 1%. Now we're down to 843. And this is where, depending on your age, you might be looking for that 4% or 5% if you're older. If you're 40 or 50 years old, you might want that. If you're younger like me, you don't need to get 4 or 5%. You want something that's a smaller dividend yield right now, but has good dividend growth, okay? So over 1%, I'm 25 years old, that's perfect. I even have some stocks that are below 1%. They're 0.2% or 0.5%, like Visa and Apple. Apple might be over 1% now, but Visa is really low. Same with Nvidia, but both great companies to invest in, and I think they'll be really strong dividend stocks in 20 or 30 years. But anyway, so that is dividend yield. The next thing, you want to jump over to fundamentals, and we don't want a crazy big payout ratio. Again, if you're someone older, you can go for 60 or 70%, but if you're someone younger like me, you want that company taking most of their money and investing it, reinvesting it back into the company, not paying out all their shareholders. So I like to look for something, honestly, under 50 or 60%. So let's go under 50. That drops the list down to 333 stocks. We're almost here, and we only picked 3 criteria right now to screen. Screening might sound all complex, and you don't know what to really pick, but that's the thing. It's actually very simple. It's really depending on what you're looking for. We're looking for great dividend paying stocks that maybe we want to invest in the long term. So there's really not that much we need to change around. There's a lot of bad stocks out there that you wouldn't want to invest in anyway, and a lot of stocks that you wouldn't even know about. So you can see it's really easy. We just change around a couple of criteria that we want to see, and we already make this list so much smaller, so much more manageable. Another huge thing for me is your debt to equity. You don't want a big debt to equity. Warren Buffett doesn't like a big debt to equity, but there are some exceptions like Apple. Apple's debt to equity is over 100%, but it's not crazy high. It's not like it's 400 or 500%. There's a lot of companies out there that's like that. So we want something that's under 100%. We dropped it down to 170. We are almost there. I want to go below 100. What else could we possibly change? Well, I'm going to want something that's going to have positive sales growth. So where is that? Sales growth past 5 years. So over the past 5 years, I'm going to want something that has had just positive. It doesn't even need to be a certain percent. It doesn't need to be 5%. As long as they're adding more sales each year, I'm okay with it. We're down to 142 now. So maybe we can bump this up. Let's see what over 5% will look like. Okay, now we're down to 92. We're under that 100. That's great. We're just going to knock off a couple more. And don't get me wrong, at this point when we're under 100, you could easily scan through all of these stocks, do your own research if you have some time and look through them. But I just want to knock off a couple more, maybe get down to 50, and then you'll see exactly what I would do with that concentrated list. So if we look through here, and again, you don't need to follow what I'm doing. Maybe you know something. Maybe you know something more than I do, like current ratio. Maybe you want a certain current ratio that honestly I don't care too much about. Maybe you want a certain return on assets, whatever it might be, a certain quick ratio, because everyone cares about different fundamentals and they're more educated on some than others. For me, I know I don't like a lot of long-term debt. I'd want it probably under 60%. That knocks it down to 53. We just got to knock down 3 more stocks. So to do that, what will I choose? Let's see. How about free cash flow? Price to free cash flow. I want a lot of free cash flow. And by a lot, I mean over 5. Let's see what that gives us. 41, perfect. I'm done now. I have 41 stocks to look through. I went from over 7,000 down to 41. And what I changed, 5, 6, 7 things. 7 things that I had to change around with this screener. And now I have my concentrated list. How would I now take this? Well, I would look through the list and see what kind of stocks I have. There might be some that surprise me on this. Let's see. Let's go to page number 2. What do we have here? Paychecks. So that's surprising. So what I like to do at this point is I'll go through these companies. If there's any companies that I know or any companies that at least interest me, whether that's by sector, industry, country, or just me knowing them. So Paychecks is a company I know. I have looked into Paychecks before. I think it's a great company personally. But at this point, what I would now do is I'd figure out, okay, how many stocks do I want to invest in? If you're someone who wants to invest in maybe 10 really strong dividend paying stocks, look through all 41. Maybe you want to be a little bit more lenient on your criteria to have a bigger pool to play from. But maybe you're just trying to find 1 or 2 to invest in that's going to fit your criteria. Well, this is perfect. You have that 40 that you can look through. And what I would now do is I would click on Paychecks and I would, you could see everything right here. Or what I would honestly do if I wanted to add this to my list, I would go to Seeking Alpha and I would look at it on this end now. And this is what I did to pick the 14 stocks that I have invested in. My criteria was a little different because I'm not so strong on dividends. I look for more growth stocks that have the potential to become dividend stocks. But these are really great growth dividend stocks. And let's just click on it. Let's go to dividends once it loads. Okay, you can see right here, payout ratio is a little high, which is interesting because I'm pretty sure that was one of my criteria. But either Seeking Alpha could be a little off right now. Yeah, I have payout ratio. Oh, over. That explains a lot. So I caught myself right there. Let's go to under 50%. That's what I want. All right, so I have 65 to look through. So forget about Paychecks. If you're older, this could be a pretty good stock to invest in. It's just the payout ratio is the big problem right here. But great dividend growth. You got a good dividend yield. Let's take a look at the history. Look at that. That is nice and consistent. That's over the past 5 years, it looks like. Let's see all. This is beautiful. This is honestly a great stock if you are older. But again, the yield is a little high. But now we're going to find a stock. I'm actually glad I messed up because at least I can now please both crowds. I could show the older people and the younger people what I would do. Again, under 50%, you're a little bit younger. You don't want a crazy big payout right now. Let's see what pops out on the list for me. It's only 65 stocks. There's got to be one that I know. Perfect. Here we go. Garmin. So Garmin, it's a tech company. It is the watch. So if we click on it, again, if you know all of this stuff to look through, you could do that. But I personally think the best thing is just to go back to Seeking Alpha, and I will type in the ticker symbol Garmin. And here we go. We are in history. Let's go to all. Okay, so, that really isn't the biggest concern for me. I mean, I'd look into that. Why did it do that? But since then, since 2011, it's been trending up, which is good. If we go to our dividend scorecard, let's see what we have here. 2.4%, that's not bad. Payout ratio, it's under 60%, also not bad. Pretty modest 5-year growth rate, but that's the point of now looking through all of these in this more concentrated list. So let's go back. Garmin, good contender, because I know if I were to look at the financials are probably really good. You don't want to invest in a dividend stock that has bad financials. Yeah, everything seems to check out. You got good revenue growth. Let's see, do we have good earnings? Good earnings. All of this looks to check out. Garmin would probably be a good stock, but I may hold off on it just because of the dividend growth is a little conservative. How about Logitech? I also know this company, LOGI. Let's take a look at it. See, now I know these companies, but I would never think to invest in them without doing this type of screening. So let's go over to dividend. Again, I'm pretty sure their financials check out. Here we go. This is gold to me. Payout ratio is super low. Dividend yield is low, but over 1%. And its growth rate is astronomical, 22%. Let's go to dividend growth. And it's been paying since 2013. So this is like the start. This is the start of the company's growth. And because its payout is so small, only 35%, it has so much room to not only grow as a company, but then grow its dividends over the course of a long run. So that would be a perfect company, in my opinion, to invest in for a dividend paying stock. But that's pretty much it. You now know how to screen for dividend paying stocks. We're able to get that list from 7,000 all the way down to 65 just by tweaking a few things here and there. But I hope you found this video helpful. I hope you learned a lot. If you have any questions, drop those comments. You already know what I'm gonna say. Subscribe if you haven't already. And guys, as always, I will see you in the next one.